Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Lance Coogan, CEO of Veles Water Limited, to discuss the market for water and what Veles is doing to provide transparency to pricing. Lance, it's great to see you. Welcome to Trade Talks.
Thank you, Jill. Very nice to be here. Exciting times.
Yeah, it certainly is. And how did the market for water start and how has it evolved?
Well, that's very interesting. In the Southwest US, the market has been trading for over a century. The first trades on record are from 1870, when it was a small diversion of the Colorado River. The first diversion for agriculture was in 1879. Since then to now, the frequency of trades has increased and there's been a lot of infrastructure development. We believe at Veles that the market is now resembling, the water market is resembling the oil market of the late 1970s, the early 1980s. It was a bilateral market then, big transactions, but the counterparties had bilateral risk and there wasn't that much price transparency, which is what will be dealt with now with the listed instruments on Nasdaq and on the CME.
And Lance, what does the water market represent, especially as an indicator and investment tool?
Look, it's very, very interesting. The water market itself, if you have a look at, let's look at our index NQH2O first of all, it's highly representative of the hydrological conditions at the real life hydrological conditions at the time of trading. It is representing the physical trades in the market on the ground. Our index is cash settled, but the underlying transactions are physical transactions. So it's telling you what's happening on the ground. And what I like about it is that in dry hydrological stress conditions, the price goes up, and times of precipitation, the price goes down. So never mind if we talk the users, the farmers, etc., it's obviously a very handy tool for them to have to hedge their prices. But for the financial community, if you now have an uncorrelated asset, which if you have a look at, for example, this year, in May, the price of water went up for our index, whereas the whole market was tanking. Now, the reality is it's not acting in a sort of negative correlation way. It was going up because it was the driest month, February month, in 120 years in the Central Valley of California. So it was responding to those conditions, which was actually sort of diametrically opposing to what the rest of the world markets were doing, and they were all coming down. So it's a completely unique instrument with, as I said, an uncorrelated asset.
And to wrap, I'm sorry, Ed.
No, I think there's another important aspect of that, is that as I mentioned, it shows the conditions on the ground. It's a very good environmental indicator which should be used by governments, municipalities, businesses, farmers, etc. If you have a look at the fires in California, this index was warning that there are dry times coming, and it could be used with other indicators. There should be more indicators as something, as a risk tool for risk management, especially of assets in the California region.
Yeah, that's an excellent point. And to wrap up here, what do you see as the future of water trading and water financial services?
Look, I think the future is bright because this is the start. This is the start of the new asset class. So what do I see coming next? Most probably options, then physical delivery. Then we're going to get into all the standard instruments. We're going to have debt, bonds, water bonds, blue bonds, whatever, swaps, ETFs, mutual funds. And I think we've got a decade ahead of us of new exciting products coming to the water market and the new asset class of water.
Yeah, it's exciting to be right at the start of it, Lance. Thanks so much for joining us on Trade Talks.
Absolute pleasure. Thank you, Jill.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.